Welcome and thanks for stopping by. I'm Digital Micro. You're on the Digital Micro Trading Journal channel, day trading for an ROI payout. No trade recommendations, no trade signals, and not selling indicators, just my trade journal. That's all this is. And I've got price action order flow levels for Wednesday, second day of August, and we've got some fallout, dark clouds, day after Fitch downgrades U.S. credit rating. You can see here on the 24-hour chart I've got posted, we have a considerable gap between where we closed and where we are in Globex right now. And I've got the New York midnight open right around roughly the 45.80 zone. New week open gap zone, I mentioned it in yesterday's video, 45.6425. That's where we're probably most likely headed at some point. And I'm just looking again at this week's new week open gap at 4608.75, 4607 above. So uncharacteristically, again, this rally, the summer rally that's been since basically Memorial Day, to me looks like it's on the verge of breaking. And every time you've got a first of the month where you have institutional buy orders and they get totally slammed with the sell day, that's a warning right there to me. So I'm going to watch carefully the levels and the time of day. So the time of day, again, for key inflection points are going to be as follows. London, first hour, London open. And then, of course, we've got the RTH open, and that'll be until 11 a.m. So I'm looking in those zones for my setups. We've got no 8:30 news catalyst event, so that won't be really an issue. So let's go to the charts and break down what it looks like. So for the few people that saw the video yesterday, I pointed out this dollar rally, and now we know there was advanced warning for some people buying this dollar. You can see the prior day we went all the way up here, 102.4, and we're still going up. And what does the Fitch downgrade mean to interest rates in the dollar? What it means is the United States government is going to have to pay higher amount of interest on their debt because you've got a lower rating, and higher rates, higher dollar, lower equity index. That's basically how it goes. And at least this short-term reaction, that's how it's playing out. The middle chart right here, ESU, you can see our block, wick, and then Globex, wick, and we're down. We're not to where we're in the relative equal low areas yet, but again, this is a sharp drop. And remember, we just got over last week's T+2 end of month book squaring with institutions from a wick high 46.35, and then we go up, but we have this pivot. Again, I'm looking at the high of the wick, lower on the left side of this day, lower on the right side of this day. So that is the long-term year-to-date 2023 possibly pivot high for maybe weeks to come. We'll see how price plays out, but right now we'll see if we can recover some of this gap. On the left is the NASDAQ, same thing with the gap, and the annotations are here like on the intro video picture. So this rectangle, a new day open gap. And again, what's below here is what I'm interested in most, the new week open gap at 4564.25 in the next 24 to 48 hours. We'll see if it can get there. Otherwise, I don't see how bears can accomplish anything until we get 4564 on the downside here. Just an opinion. I'm basically going to be keeping it really light and watching the key time of days, but this is a price objective based on this new day open gap. Let's go to the smaller time frame next. Okay, my trusty 15-minute time frame chart. So this red box dominator right here, this is the new day open gap. That's a lot of handles to be down from the close of RTH right here to where we opened up in Globex, and the actual low or the wick down was 45.72. So we're very close to the destination spot here, 4564.25. The question is, do we go back up? Notice this FOMC 50% fib right here comes in at 92. In my mind here, this is a very important level because look at these lows here on these candle wicks. These are relative equal lows from Tuesday, and they come in from the AM session basically. So AM session, we go up in the afternoon, and then we close, and then the reaction to the downgrade, kaboom, and we're down here. This is a very big marker. If we do get back up to this, I want to see how the reaction is. I'm going to be tempted to short, but I'm going to use the Renko and defer to that also. So these are the major levels. If I go back lower, there's a lot of levels below this because we've had such a big run up for many multi-weeks here. But again, we're just going to take it one session at a time. So London, RTH, those are the two sessions coming up next. And I'm just looking at RTH AM only. So that's two sessions. And if I make the bank and book some business, then I may not do anything for the afternoon session. But that's what I'm looking to do. Let's go to the Renko and check up on that chart next. Okay, here we are, the Renko. So it's been a minute, right, since we've been in the lower zone of the lower blue Keltner, which is coming in at, again, the magic price, the confluence, 45.64. Wouldn't you know it, right here. And here's the red, 89.25 currently, and we poked up there, 93. So I'm just going to extend this zone out here a little bit more. Okay. And upper blue Keltner is 46.12 for sure. I'd be looking to be short up there if we did get back up there today for Wednesday, August 2nd. So there you have it. Upper blue Keltner, red, and lower blue. We keep it really super simple with the Renko chart. We'll see how it plays out in the next two sessions. Thanks so much for stopping by and watching. If you're not already, please help the channel and support it by subscribing. Thank you. Take care. Aloha. Bye.